Ladies and gentlemen, welcome to our program. I'll be presenting. My name is Aaron. We're part of Group A. We are speaking today. I'll be talking about a modification of the 3 White Soldiers and 3 Black Crows program, taken from the Stocks and Commodities paper and from candlesticker.com as references. So, I'll be speaking on and introducing the concept of the 3 White Soldiers and 3 Black Crows. Then the modified pattern of what we use, the design of the program, and the results and conclusions of our research. Next. So, 3 White Soldiers. These are candles that are increasing and from one day to the next as the prices are going higher. When 3 of them happen consecutively, that's what we call the 3 White Soldiers, and vice versa. When we see prices falling 3 consecutive days, those are what we refer to as 3 Black Crows. The 3 White Soldiers here are displayed in green, and of course one following the other consecutively in the days. Same thing was here. They are marked. The 3 Black Crows are marked as red, and of course 3 consecutive days. So how we modified the program was, instead of following after 3 days, we stretched it to a 10-day period where we would mark the lowest of the low and highest of the high. We would follow the trend of 10 days using the references of the lowest and the highest, and then on the 11th day, when it would go either to the lowest point that we referenced or the highest point, we would use those as the stop point for when to pull out of the investment. Here we have this is the 3 White Soldier modification. So we follow the trend, the uptrend for 10 days, using this as a reference and this bottom point as a reference as well, and using that to scale where we would stay in the investment or get out of the investment with those 2. Same thing with the 3 Black Crows here. As we see the trend falling, we would use these 2 points as a reference to either get out here if it reached there, or the top when it reached one of those 2 points. Here, with our program, the way we designed it is we have integers and booleans, and how we define them. Well, there's the behavior. We would mark it as 1. The top of the body would equate to the top of the previous body. It would be 0. We have a doji definition that we've used. If the absolute value of an open or close is less than the open plus the close divided by 2, it would times 0.808%, we would mark it as true, otherwise false. And of course, with the booleans, we have the bearish and bullish. When the patterns would display a bearish pattern or a bullish pattern, it would be marked true, otherwise false, and it would identify one or the other from the boolean. Then we have the big and small candles. We would, using the formula that we used before, if there's a bigger candle that comes out to a certain value, we would mark it true because it would reach a value cap that we put to identify it as big. The same thing with the small. Then we also have the triple H or triple L, which is the higher than the previous high and lower than the previous low. So in reference to the 10-day or to the 10-day patterns, or the 3 Black Crows or 3 White Soldiers, we have to look at the highest point of each candle or the lowest point of each candle to see if it's an uptrend or downtrend. Next. So with our program, we would look at the pattern and target this type of data we want to see. We would use the algorithm, see if it matched or did not match the target pattern. If it didn't, it would reach the end, and it would either look for the research, like search again for the pattern, or if it did, we would look at the 10th and 11th candle of that period that we've chosen, check the previous 9 days, and the 10th candle being the highest high or lowest low. If not, it would end the search because it wouldn't match our criteria for the candlesticks going up or down. And if it was true, then of course we would have gotten the exact model that we were looking for. So with the 10 companies that we've researched, we have FCX, Google, JP Morgan, Nvidia, ATV, Bank of America, Best Buy, Costco, EA. These are the number of trades that we've had, that we've looked into from the time periods of 2007 to 2012. These are the number of trades within that time period, the average gain and loss, and then we have the total wins and total loss, and the total average of the gains and losses. And so this side would be the short investments. The long ones here are listed there with the gains and losses here as well, with a total wins 149, total loss 155, with a negative 0.14%. Oh, it's the next one. So of course, here it is with this is the other side of that same data with the gains and losses and the totals and the average. And that is our presentation. Thank you so much for watching.